everyone, I'm Christine Kim reporting for CoinDesk. We're here at Invest in New York City. I'm joined by Stuart Popjoy and Will Martino. Thank you guys so much for joining me. We're here to talk about the launch of the Kadena public blockchain network. You guys very recently went live with the platform, launched on November the 4th, and I'm really interested in just hearing about some of the metrics of the live running network. Can you guys tell me about how many nodes are running the platform right now?
Sure. Well, thank you so much for having us. I'm going to defer to Stu for most of the actual telemetry stuff. We've just had this on the community side. We've had our Discord has increased by 10x over the past couple weeks. We've had tons of people come out of basically just nowhere who've been waiting for this scalable proof of work chain to manifest itself. And now that they've seen what we're doing, they're really excited. They just start building out all of these tools all over the place. We have nodes all over the world, and our hash rate right now is creeping up towards around a terahash, and it's only been a couple weeks.
Yeah, so we have more than 100 nodes running all over the world. As Will mentioned, we're getting close to a terahash of hash power because the community. There's 3 different efforts that all came online at once for a GPU code. So GPU kind of started over the weekend, yeah, it's just the community response has been absolutely fantastic.
So these 100 nodes, they're not run by the Kadena startup. They're just distributed around the world. And are these miners, is the mining algorithm that they run similar to the Bitcoin proof of work mining algorithm? Is it a little different?
So it's a well-respected but overall underused in the mining community hashing algorithm. It's called Blake 2S. Blake 2B is used in a few different projects that are bigger profile. Blake 2S is only used, I think, by Verge, and it's just one of the few that they use. So we're the first ones to really go with it wholly, and also our design for how it works is a little bit different, so none of the ASICs that exist apply to us. That being said, it is a very easy to use algorithm, so people have been able to very quickly build up infrastructure around it. And Chainweb is all about orienting and aligning the interests of miners and users and businesses. We don't you see with Bitcoin where there are these forks because miners want to have more adoption, they want more throughput, and the users don't want it to be something that is less decentralized. Chainweb fixes this issue where miners can say, the throughput is being saturated on the network, we can expand into more chains, and the users are comfortable with that because the overall decentralization and security actually increases as you go to a bigger network. So.
By Chainweb, you're talking about Kadena, the public blockchain network, correct?
Yes.
I know that it used to be called...
That's the protocol.
The protocol's name is Chainweb?
Yes.
Okay, gotcha.
Blockchain
The network is called... Okay. It was funny when I had read the press release, I caught myself when I was writing the article, writing down Chainweb versus Kadena. So I also know that along with the launch of Kadena, you guys are doing your 3rd token sale, trying to raise $20 million. Tell me a little bit about the kind of user participation you've been seeing in terms of the token sale on, was it what was the exchange platform that you guys were
So the
using?
offering is on CoinList.
CoinList, that was the one, right. So tell me a little bit about how the token sale has been running on CoinList so far.
So it's been going well so far. We can't go into too many details just because of regulatory concerns, but CoinList has been a great partner in getting the token sale off the ground and bringing people in. It goes on for another 2 weeks, and this is the sale that is right before the main platform launch, which is on December 5th. And it is kind of this initial period when the system is booting up and we're starting to get more and more people involved. The interest has been interesting. It's been global. And people have been looking at the way that things are structured and they're liking what they see overall. Between them and the miners have been loving us. And then people have been looking at the rounds and have been like, this makes some sense. This is a new strategy for how to do this stuff. And yeah, I think that this could work. This might be what comes after IEOs.
Well, I actually think that it's interesting that this sale is open to US accredited investors, which is a strategy that you had taken by doing 2 sales side by side. Do you want to talk a little bit about the sales strategy in opening up the token sale to U.S. accredited investors?
Sure. I mean, getting the U.S. involved is a very important thing, and the way that we structured the Reg D offering is one where you can get in at a very similar rate to our early investors. We don't believe in launching an application or launching a network with a multi-billion-dollar market cap where VCs are already 30, 40x right at launch. We don't think it's healthy, and I think that the market's proving that out. We take a very different approach, which is launch with a very low market cap, because we want to be able to gather as many people who are interested in the platform as we can early to help us build the thing into something great.
And I did also want to kind of ask you, because you had mentioned the December 5th launch, tell me a little bit about what functionality will be enabled on the network on December 5th. Stuart?
Well, so what we're in right now is our mining release, which is kind of like a beta, but it's the real production system, and it allows miners to come into the system as we've seen, and us to kind of work out the kinks and the consensus and the mining algorithm, and working with community has been really great on that. We've been able to make tons of progress in a week and a half or whatever it is that we've been running. But what we did was we said that you couldn't transfer any tokens or install smart contracts or do anything like that. And because that's what comes on December 5th, which is the proper launch of the platform when the token properly becomes liquid. The token is actually, the underlying token of the blockchain is actually expressed in a smart contract itself called the Kadena coin contract. And that's basically what we're doing on the 5th, is opening the floodgates to start running transactions in general. So that means first, of course, you can start transferring tokens. Miners can start transferring their tokens and on the platform itself. And remember, this is a multi-chain platform, so they'll also be able to start moving coins from one chain to the next on the smart contract platform. But also importantly, users, businesses, dApp developers will start be able to deploy smart contracts onto the platform, start to build hybrid applications which interact with our public blockchain, and also with other platforms that are starting to have the packed smart contract language running on them.
Speaking of other platforms, I know today you guys are announcing this partnership with the Web3 Foundation in building for the Polkadot blockchain. So tell me a little bit about how that came about and why the Polkadot ecosystem.
Yeah, it's been very interesting talking with them. We started talking with the Cosmos Foundation a while back, and I've already done some work to put Kadena Mint, which is packed on top of Tendermint, into at least a first version. We're continuing to work with them and expand out the feature set, also integrate it more broadly with our ecosystem and with theirs. And we started talking with the Web3 Polkadot people, and they were very interested in looking into seeing if we can get packed on top of Polkadot as well. Kadena doesn't believe there's going to be one chain to rule them all, but we do believe there's going to be one smart contract language, and this seems to resonate with a lot of people. Smart contract languages take years to build. There's just a lot of magic that takes place to actually build one that really works and that is the right structure. So once you have something that works, so long as it's embeddable, then you can start putting it on other platforms. And Pact from day one was always designed to be embeddable on different consensus protocols. We put it on our private blockchain first, Kadena Kuro, and then we put it onto Chainweb, and then we put it onto Tendermint, and hopefully we'll be able to figure out how to put it onto Polkadot. And the lovely part of it is, because Pact on Chainweb needs so much interoperability from just out of the gates, because of multi-chain architecture, it already has most of the tools that you would need to go from, let's say, Cosmos to Kadena mainnet to Polkadot parachain, perhaps, to something else.
That's really interesting, because moving from Kadena to Polkadot to Cosmos, tell me a little bit about the strengths and weaknesses of each platform for a dApp to potentially want to build on Cosmos versus Polkadot, Polkadot versus Kadena. Tell me a little bit about the strengths that you see and the differences between these smart contract platforms, given that you're hoping, at least, that the Pact language will be available on more than one.
Well, ideally, Pact makes it a very seamless experience by having the tools already built in for hybrid interactions. For the developer, it shouldn't be too much of a shock to move from one ecosystem to another.
Gotcha. And why would that developer want to move from one ecosystem? Tell me a little about the differences between the ecosystem.
Cosmos, a lot of times in Cosmos, you're actually building kind of a mini network for a particular application. Cosmos is like a hub and spoke setup where you can have a proof of stake network over here that connects to the Atom proof of stake network, and that's why it's Cosmos, is because it's almost like intergalactic kind of like mini networks interacting with each other, and so that's a little bit different. You might have an exchange, for instance, that's running a Cosmos mini network, and then they might have some smart contracts on that. So Cosmos is working on a protocol for just their communication throughout that system. But the way you scale things is a little different there. Polkadot is, of course, still to be put into beta or anything like that. But Polkadot is is more similar to something like Ethereum 2.0 or something, in the sense that it's a beacon or relay chains that communicate with all these parachains. And so it's a little more heterogeneous in the sense that one chain to another, it's not totally, it's not totally clear yet what the advantage of being on one chain or another there. I think one of the things about Chainweb, about the Chainweb protocol running on the Kadena public blockchain, is that it operates as undifferentiated scalability. So the reason why you deploy to one or more chains strictly has to do with load balancing and how much, so you avoid the CryptoKitties problem that you roll out your smart contract, it's a huge hit, but now it's a victim of its own success. With Chainweb, you can just say, fine, I'll just throw it on 5 more blockchains. And as Will was pointing out, once we get to the point that currently we're running with 10, once the time comes that it's like, oh wow, we're getting pretty close, the fees are starting to go up, we're getting pretty close to saturation, boom, we just go to 20. And then, so I think each one presents a slightly different approach to scaling, so probably a lot of it has to do with how those interact with the particular use case, but the nice thing is that you're not going to have to make some big separate investment in application developer expertise to be able to work on any of these platforms.
Interesting. Anything outside of scaling that you wanted to add in terms of differences between the 3 ecosystems, Will?
I think the user experience of what it would be like to use each of the 3 is worth highlighting. So, imagine, let's use the CryptoKitties example because everyone's familiar with it. CryptoKitties deploys out to, let's say it's Kadena public chain, so on one of the chains on Chainweb. And they get great product market fit, and they saturate that chain with transactions. So then they scale out to a few more chains on our network. That is one way of scaling, but they may come to a point where, and you actually see CryptoKitties doing this now, where they are going and building their own chain, where they could say, you know what, we actually want to run our own chain and run some application logic inside of that. A big reason for that is that gas, when you have a kind of a spoke that is coming off of something, the gas in that environment doesn't really cost the same. So you can have more logic much cheaper on something closer to a spoke and a hub and spoke network like Cosmos. Whereas on Kadena mainnet, you're always paying the gas. Now we have other gas, we have some really cool ideas for gas and related things, like being able to actually have accounts that the Kadena Foundation makes, and it gives the community that it will just pay the gas fees for the couple of years. But those are still in beta. We're still figuring out if those exactly work the way we intend them to. So you can deploy a contract out to Kadena mainnet. You don't have to run any infrastructure. It's just a public piece of infrastructure, just like Ethereum is. You don't have to run an Ethereum node just to deploy a contract. You can if you want, but you don't need to. But when you move to something like Kadena Mint and you're attaching to Cosmos or you're attaching that to Kadena mainnet, then you actually are running your own network. And you have much more control, you can iterate much faster on it, but it comes at the cost of you're fundamentally pegged to something else for your decentralized security. So that's a kind of a different way of thinking about this stuff. Do you want to really run your own network for your app, or do you just want to deploy a smart contract out to a piece of scalable infrastructure? And then parachains and Polkadot are somewhere kind of in between, where those have different use cases where they make more sense and some use cases where they don't. It's kind of like, it's closer to Ethereum 2.0. We really need to see what it looks like in production before we can say for sure exactly what specific use cases it'll be best at.
It's so interesting to see the way that smart contract platforms and the smart contract ecosystem is growing nowadays. But I want to come back, of course, to Kadena, to Chainweb, and recently, there has been regulatory concern around the way that Telegram, one of the biggest messaging giants, have conducted their token sale. Moving forward, do you guys have, Will or Stuart, do you have any concerns about the way to that the way U.S. accredited investors can hold tokens, specifically because it seems as though the way that you guys have conducted the sale, the token sale for U.S. accredited investors, is similar to the strategy that Telegram had taken and thought to be safe and secure.
It's a great question and also a very sensitive one. I'm very, very interested to see how the case goes next year when they go to court and talk with the SEC. I would say that we believe that we have the right regulatory strategy for this. I've been working on it with a team of lawyers for a couple of years now, and it's based on 30 years of case law. We think it's the right thing to do, and it's actually a competitive advantage for us. That being said, the SEC is still figuring out exactly how it's going to treat crypto. And I think the important difference between us and Telegram is actually the marketing and how they went about the actual enacting of the sale and the size of it. I think that is going to be a serious distinction. Again, I feel that it is very dangerous to launch a project with a multi-billion-dollar market cap. It's very hard to justify, and it smells wrong in a bunch of ways. Whereas if you're launching something very small, with a low market cap like we are, we're only $80 million at the end of year one. And that's intentional so that people can get involved and help build it to be something better. But if you're going out with $1 billion, $2 billion, $3 billion, it's very hard to justify, and it's much more, it has the wrong kind of smell and flavor to it. So I think that's probably the biggest difference, is even though, at the surface level, it looks like we're doing similar things, and, we did follow, Reg D 506C, just as they did, we were very, very much more conservative in our entire approach, and I think that that's going to be to our benefit long term.
Anything to add to that, Stuart?
Not about the regulatory environment so much. I think what's going to be interesting is just that so many platforms are launching in the upcoming 6 months, and I think the main thing that concerns me is just that the regulatory environment is going to be shifting so much. I think it's going to get increasingly difficult to launch a platform. That's one of the reasons. We committed to releasing to getting our mining release out on October 30th and launching on December 5th, and we hit that. But one of the reasons why we were a motivating factor was to be able to do this while we're still in this period while blockchains are launching and coming to market. Because if the situation doesn't change and there isn't more clarity, I think it's going to get harder and harder in the next 2 years for people to innovate and bring new platforms to production.
That's really interesting. Hopefully, I guess the future really is to be seen, especially on the regulatory front. And I do also want to hit on the DApp environment in the future, especially because December 5th, you'll be launching smart contract functionality. Do you want to give a little bit more detail on the applications that users will be able to use and be able to experience on the Kadena platform?
Yeah, absolutely.
Even some of the hypothetical ones that you suspect to be on there too.
Yeah. Well, as we've said before, we're working with USCF. They're working on launching, more like in winter, they're looking on launching their investment product on our hybrid blockchain. So that's going to be a really very interesting product to watch. But in the near term and surrounding our launch, we're working with some really great partners like Remedy, who is bringing a supply chain for CBD oil product, where they'll be timestamping QR codes in real time onto our blockchain. We're tremendously excited about that. Interestingly enough, with the huge community response of miners, we've had a big miner show up that has a use case, and they've been waiting for a scalable proof of work platform, and we're the first. So I think miners in particular are very excited about this platform. There's some things about it that make it a more profitable platform to mine than others, and it has to do with the fact that you have 10 chains going in parallel, so the way you can spread your mining power over that results in a more efficient utilization. But as a result, they get it right away how the platform is scalable and how smart contracts can interact with that. I mean, there's going to be so many, we were mentioning gas before, there's going to be ways that like a smart contract can pay gas for another smart contract, and that makes it so a dApp developer could just give a small amount of money to a service provider and not even have to think about this whole thing. We're also launching excuse me, our wallet. And that's going to have some very exciting features to make it really easy for dApps to work with users and kind of overcome some of these adoption struggles that we've seen getting users to use a cryptocurrency-backed application, where it's really easy to make an API call into the wallet. You don't have to have a huge application inside of your application in order to use cryptocurrency and bring it out to the public. So. All in all, it's been really exciting to see the increased interest this month, and it's going to be really fun to watch what people do on December 5th on the platform.
I bet. Well, thank you guys so much. I think there's a lot clearly to look forward to in the next coming months, and I'm glad that we had the opportunity to chat about it. Thank you guys so much for watching. This is Christine Kin reporting for CoinDesk with Will Martino and Stuart Popjoy from Kadena.
Thanks so much.